All right, hello traders. Welcome to my trading recap video. What you're looking at is the Jigsaw Day Trader platform. This is all just this is depth of market for several different products. I'll go through them very quickly here from left to right. The Ultra Bond all the way on the left. Then second to the left is the 30-year symbol ZB. In the middle is the ZF, which is the 5-year. Second to the right is the ZN, which is the 10-year. And then all the way on the right is the E-mini S&P, and that is symbol ES. So when I say ES, I'm talking about the E-mini S&P. So in a normal, healthy market, when the ES is selling off, when it's pushing into the lows, you should see these fixed income products pushing into the highs, and vice versa. That really hasn't been happening at all lately. Which is making for kind of a difficult trading environment, but we shall endure. So this is all just trading on order flow. There is no charts, no indicators, no oscillators, no moving averages, nothing like that. It's just observing the order flow and trying to pull out a few ticks at a time. So our first trade is I got kind of a late start this morning. 7:20 a.m. was the first trade, and it's in the 30-year, and I just kind of got to my battle station. Hadn't really been observing a lot of the market, but I did notice that the 30-year had basically shot up from the lows all the way up, or probably the mid-range, like all the way up into where you see it now in 6-7 area, which is really overextended. When that happens, a common practice for the 30-year is for it to kind of blow up, 10, 8, 7 ticks or whatever, and then just retrace, a good portion of that. So it happens all the time. So basically, I'm just kind of banking on that. You can see the Ultra Bond, which is kind of a leading indicator for the 30-year. The Ultra Bond had pushed up and already fallen in 5 or 6 ticks. So that's good for 2 or 3 ticks in the 30-year. And that's kind of what happened. So I just kind of caught it on the way down. Put the target back at the point of control, just sort of expecting it to fall back in. And we eventually get down close to it. I think we trade down into 31.30. However, I decided to pull off. I decided to cover this trade after only a couple of ticks. And the reason for that really is just because I had like I said, I just kind of sat down. I have a standing desk, so I didn't really sit down, but I just got to my workstation here. Wasn't really ready to go. I just saw that move was happening, and I kind of wanted to jump in. If I had more wherewithal, if I had more caffeine in my system, I probably could have worked that trade a little bit better. The other thing, too, is I think I was a little bit distracted by the 10-year because I figured that was a better trade than the 10-year. We really work on that profile step. In the ZN at 28, 27.5, which is the second DOM or order book from the right. I thought that was a better trade to get into there, and I think I was a little bit distracted at the time. But like I said, it does start to fall in. Is always just a good setup in the 30-year. 30-year is more of a momentum product for me, whereas the 10-year it's a little more liquid, so it will kind of act as more of an intraday swing trade. Coming into the market this morning, I kind of saw the profile in the 10-year. It looked like it was going to be a pretty good trading environment, and it turned out to be more or less. Where you have just like you see that they've kind of touched each side of the range. You have some pretty decent volume with either a profile step or a good taper. So I thought, might be a pretty good day. Just pick your spots, be careful, like always. Turned out to be an okay day. A little choppy in areas. I prefer, obviously, to just see buyers stack up and start attacking, or sellers, vice versa. Didn't really happen today. There's a lot of back and forth, a lot of choppiness. But it is what it is. If you're willing to kind of sit through the back and forth, then I think it's definitely doable. I think that, aside from a push that was kind of later, not later in the day, but I think it was right around 9:30, 10 o'clock. and we'll see that. But there was a push all the way up to the overnight high, which is kind of unexpected for that time of day. But other than that, I think it traded pretty orderly today. So we're getting the move down. The Ultra Bond's definitely pushing down in this one. Thought I was in pretty good shape. I'm kind of watching this again with you guys all at the same time, so I'm just curious to see what shook me out of this trade besides just the cobwebs in my head. I mean, we'll keep an eye on the Ultra Bond. If it starts trading back up and past the yellow line, then maybe that was enough for me to get out. But I don't really think I was in a lot of danger of actually losing money on this trade. I think it was the fact that I just stalled out there. You know, if this goes like 3 or 4 ticks and stalls like that, I got no problem just waiting it out. But when it's in that little range of like just 2 ticks, I just don't want it to snap back. And see, I think I was still trying to jump in on the 30-year or the 10-year. Excuse me. And of course, I covered that at 4 in the 30-year, and it immediately drops in. Now we're down to 2. So I would have been in great shape if I would have just held on. And right there, I was like shaking my mouse at it. I'm like, you fucker. Of course, you do that every time. Just goes to show. Always when I cover it too early, it decides to just start falling in, and then when I don't cover it, let it ride out, it'll just trade right back through me. Just very irritating. So that was trade number 1. I will cut to trade number 2 right now. Okay, so this is trade number 2. It's at 7:57 a.m. It's in the 10-year. And basically just trading off that profile step. Sold 27.5. And I think in my mind, I just sort of figured that if it did get up to 28.5, that I'd probably just cover it. And then if it got up to the overnight high, I'd reevaluate. But it looked like it was just going to go. I remember this trade very, very distinctly. But it looked like it was going to go, and then obviously, you know, it didn't. It stalled out. The bid stacked up. It's at 2100, which there was a lot of spoofing today. Similar to yesterday, you just see the bids and offers just peel away for nothing. Just so there's nothing really even there. It's a little irritating. It makes for a difficult order flow analysis environment. And I remember thinking I was almost going to bail right here at 28 just to kind of pull it off and refresh. But then I saw right there that they just tried to take a bid and they couldn't do it. So that just kind of gave me some reassurance that I was going to relax a little bit and just sort of ride this out. But you can see the Ultra Bond's bidding up, 30 years bidding up, 5-year is pushing into the highs. Just not good. Right there, I should have covered this thing. I don't know why I was don't know why I was hesitating. I think I was just giving it a chance to push back a little bit. But this eventually does kind of go back and forth, and then it eventually just trades into me. So I'll fast forward to that part. Takes a little while. We even get up to 28.5, and they push back on it quite a bit. Until I finally get stopped out, which kind of sucks. I think if we stalled out at 29 and then dropped right back in, and We traded 29 to 27 for a good portion of the next, I don't know, 15, 20 minutes. That's kind of when I see this profile step start to develop here at 29. This is trade number 3. And I also got filled at 9 in the 30-year, and basically what I was trying to do was just see which market I got filled in or which product I got filled in, and then cancel the other trade. And I basically got filled in both of them at the exact same time, which happens. I'm okay with it, especially when it works out. It's the same sort of idea in the 30-year, is kind of that last push higher. We get rejected at 10 and 9. So I just figured you'd see some sellers there once again. And then in the 10-year, that was in the 30-year, symbol ZB. And then in the 10-year, basically it was just that profile step. Saw that thing start to develop and got a lot of pushback. So that's what kind of got me to jump into that one. So I just follow down the 30-year stop loss, just trailing it down, and eventually it snaps up into me. So I get 5 ticks out of that one. And in the 10-year, basically this thing, if you look at a chart, basically this only real structure on this thing, it kind of looked like a trend day all the way up until about 10:30, almost 11 o'clock, and then it started to fall back in. And it really didn't actually trade all the way back in, didn't drop back down into the range until, after the close, cash open or cash close. So it really was just a trend day all day today, and that's kind of why I don't do really well in these environments. I think that's why I struggled a little bit. Did okay, but not great. So I think this is kind of where support would have been for a move higher, and I think I take this thing off. I'll go ahead and fast forward, but I think I eventually, I pull out about 3 ticks out of it, and it's 27. I could have got maybe one more, 27.5. 27 is really where that support is. And I probably, if I would have hung in there, I could have got one more tick, but this turned out to be the right call. This is kind of, sometimes you take it off too early, sometimes you cover it too early, sometimes it's just, it's not soon enough. It's the hardest part of trading. It always has been. So this kind of just, I end up covering it there at 27.5. And it ends up going, just sort of trading sideways here for a long time. It actually trades up into me again, comes back down, and eventually we get all the way up into the overnight high, and that turns into the last trade of the day. And we just kind of poked through 2 ticks up, really just 1 tick. We never went bid at 31.5. Even after I get into it, it goes up against me a little bit more. You can see where the 30 is trading up at 16.15. So we've already kind of pushed down a few times and then popped up through the high, or at least the pit high. And this is just kind of one of those things, you just got to let it play out, and it takes forever. This is the lunch hour, so it's 10 o'clock my time. It's 1 o'clock on the East Coast. So people are still at lunch, so it takes forever to kind of drop in. And once it does kind of get down there, it just stalls out, and I just take 1 tick off of it, just simply because I've got other things I want to do. I've been standing here for 3 or 4 hours now, and I wanted to do something else. So I was just kind of over it at the time. So I'll take a tick and be done with it and have that be my last trade of the day. And I probably could have got 1 or 2 more ticks out of this thing. It doesn't quite fall in. I think it trades all the way back up again, or pretty close to it. It trades back up to 31. I don't think I had a chance to sell that. I don't think I was around. I think I was doing something else, but could have sold it one more time, and then that's actually when it fell in, all the way back down to the point of control at the end of the day. But by that time, I was kind of over it. A bit of a quick recap video, just simply because there wasn't a lot to offer from an order flow perspective, other than maybe just what we saw happening here at 31 in the 10-year. If you were to go back and watch that, you could see that how that kind of profile started to develop at 31. You could see all the buying orders over here. It ends up being 10,000 versus 6,000. If you look all the way here on the right, just above the overnight high initials, you can see 6,000 versus 10,000. So you had 10,000 basically buy orders that were absorbed by sellers at that level, and that's kind of what gives you that 17 plus in the volume profile. That's really the only kind of order flow indicator I got today. Other than that, it was really just sort of reading the context and understanding the context, and just knowing that most likely, more than anything else, this thing is not going to blow up through the overnight highs, simply because the bonds are still way off the highs, and the 5-year basically did the same thing. It just kind of ticked through by 2 ticks. 5 years can be a leader typically of the 10-year because it's a little more illiquid, although that hasn't really been happening lately. A lot of my clues have not been coming to fruition lately. But that's about it for today. I think I walked away with 8 ticks. Not bad. I'll take it. Again, let me know if anybody has any questions, comments. Hope everybody's happy and healthy.